Hi guys, this is Brad Alexander from FX Large in London. Last week's central bank summit in Portugal bolstered many currencies, especially the euro and the pound. As well, since the beginning of last month, we've seen general dollar weakness on all major currency pairs, so we will be looking for some opportunities with the dollar, especially Kiwi dollar, as we can see a clear upward trend, and we will be looking at a bounce off this lower trend line back to this key level of resistance. A break through the lower trend line could signify a major move to the downside as we look at the daily chart. We have no Kiwi news coming up this week, but lots of US news, including FOMC Meeting minutes Wednesday, and July the 4th is, of course, a US holiday with all major markets closed. However, we have lots of Australian news with retail sales and an interest rate decision Tuesday. Last month, the Australian retail sales figures were much higher than analysts expected, which seems to have started a bull run on Aussie and the crosses, which, in the case of Aussie yen, is still going on. Looking at the daily chart on Aussie yen, we still may have room to move as we have key levels of resistance up to 88.17 yen. And with horrible election results from the ruling party in Tokyo, we may be heading into a period of uncertainty for Japan. Looking at the Canadian dollar, there are rumblings about a possible interest rate rise this month, which will certainly help the loonie. It has been getting stronger for more than 1 month now and has been helped by the price of oil, as the Canadian economy is still very dependent on the price of crude. Looking at gold, the precious metal has been on a bear run for 1 month, with the next level of support at $1,214. Looking at the daily chart on gold, we can see that we have broken this lower trend line and we have 3 levels of support before we plummet to $1,123, last seen in December. The indices are all up today, but they are showing us a curious picture with bear runs on the CAC 40, DAX, FTSE and NASDAQ, consolidation with the S&P and Nikkei, but the Dow Jones Industrial Average is hitting record highs. From a technical aspect, we have poked through the upper Bollinger Band at resistance, but we should wait for a drop below 80 on stochastics before thinking of trading a reversal to the downside. You may recall last time we spotted a nice pennant on the CAC 40 and a descending triangle on the FTSE. Both broke through to the downside, and if you caught these, there were some nice profits to be had. Getting back to the news, we have a couple of events in London coming up with the monthly construction PMI Tuesday and the services PMI Wednesday. These purchasing managers' indices are important barometers of the UK economy and usually affect the pound. We can see clear pound strength against the yen, but consolidation with euro and Aussie, but from a technical standpoint, we have just broken the neckline of this double top on cable, so let's keep an eye on this one, with a long way to fall to this level around $1.28. That's all for now. We'll see you Thursday morning with a look at this week's upcoming non-farm payrolls. Happy trading.